Hi everyone, in this video I'm going to highlight the critical metrics and numbers that you should know from Oracle's most recent earnings report. So let's get right into it. Of course, Oracle is digesting a major acquisition it made. Overall revenue in the second quarter of its fiscal 23 increased to 12.3 billion, up 18% from last year, so solid revenue growth on the top line. Earnings per share of 63 cents was compared to a loss per share of 46 cents last year. Of course, the comparable quarter last year included $4.7 billion of acquisition related expenses. Without those, they would have been positive on the bottom line last year as well. Impressively, cash flow from operations jumped to 7.2 billion in the 6 months ended November 30th. This was up from 1.7 billion in the same period last year. However, Oracle did experience a $27.8 billion cash outflow from investing activities in relation to the Cerner acquisition. And the CEO, Larry Ellison, made a comment regarding the acquisition, stating that since the acquisition, Cerner has contributed to Oracle's growth and Oracle has helped Cerner improve its technology. But we are just beginning our mission to modernize healthcare information systems. So, overall, a solid quarter from Oracle, solid progress in digesting the acquisition. These things are never an easy task to onboard, to bring together such a major company, such a company of this size comparatively to bring it on board. Oftentimes you'll hear statements from the CEO saying that, oh, we're behind schedule on this regard and it's going to take a little longer than we thought, or all of the positive things that we thought we were going to get when we made this acquisition are not turning out as good as we expected. So there's a lot of times when acquisitions don't go as planned and there are major hiccups. So the fact that Oracle reported a steady as she goes quarter is really good news for investors. It's a sigh of relief in the concerns that, what if there was something that they didn't realize, some synergies that they were expecting that is not coming to fruition. So investors of Oracle did not see very much of that. So that's good news. And then the overall revenue growth of 18% was really solid on the top line. Of course, I follow a lot of technology companies, a lot of cloud service companies, and many of them have been raising concerns that spending from their clients has not been slowing, but it's been more scrutinized and deals are taking longer to close. So they're under the microscope more so than ever, more so than in the recent few years. And this is something I've been paying attention to because if something is under the microscope, that's raising the chances that it gets cut. So if a business is paying attention to these costs more so than ever, then there's an increasing chance that these costs get cut or eliminated or reduced or delayed. And so the fact that Oracle did not see that happen this quarter is good news for Oracle investors. So overall, that's the theme I would say for this quarter for Oracle, was that investors can breathe a sigh of relief in that they didn't face any major headwinds, any major bad news, any announcements that could send the stock lower. It was solid, and that's what investors need in this time when tech companies are facing significant headwinds, major job losses, major expense cuts. All of this is influencing the tech industry, and so if you're a cloud service provider, you're just trying to make sure you avoid a disaster right now. That's the key, in my opinion, for these big tech cloud service companies. Just avoid a disaster, make steady growth, and wait for more visibility in the macroeconomic environment. All right, so that's all I've got for this Oracle earnings update. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.